Hi everyone and welcome to today's morning report on Thursday the 2nd of July with me, Rich Perry, market analyst at Handtech Markets. The trading day has started off fairly settled really. It's Non-farm Payrolls Day, so that tends to be the case when you do have European trading session in front of that payrolls data. You tend to see the forex markets be rather sort of settled, and also equities as well. We had a slight bit of weakness in equities, but that sort of unwound back towards flat again. You've had a lot of toing and froing in the last 24 hours again on Greece. Talks of the referendum, and Cyprus trying to sort of trying to sort of play the game, and it seems to be that the creditors are now sort of becoming increasingly annoyed about Cyprus, and they're talking about the fact that the referendum now needs to happen, and they're going to wait until after the referendum. So I'm going to take the view that anything around that is intraday noise, really, and until we have this referendum on Sunday, then I don't really think there's going to be a great deal of movement on the Eurozone. On the Greek scenario. In terms of bund yields and sovereign yields in Eurozone, bund yield has started to pull higher again, so that would suggest a slight settling of sentiment, and Spanish yields, which I'm taking as a reflection of the peripheral Eurozone, are also reasonably settled as well today. So that's why equity markets, or one of the reasons why equity markets are fairly positive. Also, you've seen the VIX volatility index starting to drop away in the States. That is again reflective of that improvement that we've seen in Wall Street overnight, and also Asian markets overnight as well. So coming into this payrolls data, we're sort of fairly well settled. You've got the dollar, which is again had strong movement in the last couple of days towards the bulls, and we're seeing a reasonably settled move today, or outlook ahead of that payrolls data. Payrolls obviously will be dominating market opinions this afternoon, and we have the payrolls data at 1:30. It's expected to come in at 233,000, which is slightly below 280 last month, but last month was pretty strong, and it'll be considered to be a fairly decent number if 233 is seen again. But the most or majority of the focus will be on the average earnings, I think. Average earnings, which picked up last month, which are now on a year-on-year basis anyway, they're up 2.3%, and if it comes in line with expectations at plus 0.2% for the month, that would be pretty much holding on to that 2.3% growth. So average earnings starting to sort of hold this improvement that we've seen in the last couple of months. So that would be part of that data today at 1:30. Now, also we've got the factory orders at 3 o'clock for the States, down or negative 0.5%. So that those factory orders remain under pressure to the downside. So that wouldn't be a very decent number to help support the dollar. Right, so that takes me to my chart of the day, which is the Kiwi. The Swiss franc. We've had in the last few days, you've had the Swiss National Bank's Governor Thomas. Crikey, I've absolutely completely forgot his name. We've had the governor of the Swiss National Bank, come out and basically just say that the Swiss National Bank is going to remain. Thomas Jordan, sorry. Is going to remain active in the market to try and support the euro, to prevent the Swissy from strengthening too far, and that's had a bit of a reversal on the Swissy. Certainly the dollar Swiss has pulled higher. That is reflecting dollar strength in the last few days anyway. We've had the dollar stronger anyway, so that's reflective of that, and we've seen a breakout above the 94.17 level. 94.17 level on the dollar Swiss, which is a 4-week high now on the dollar Swiss, a breakout, and I think now reflecting the improvement in the momentum indicators, stochastics rising nicely, and also RSI pushing towards that high, and I think that's reflective of a move we're going to see back towards that key May high that we saw at 95.45. I would see that rally, so any sort of intraday corrections are a chance to buy. We've had a bit of consolidation already, as these overbought hourly indicators have just unwound slightly, but I think it's just a near-term corrective move. So I think anything back towards 94.20 area, which would constitute that breakout I think that would be a chance to buy on this now. I think that would be a nice little dip for a buying opportunity, because I think this outlook is pretty strong now on this dollar yen, for certainly for a test of that May high. And the improvement in the indicators pretty much across the board are certainly reflective of that. Also, even across the last few months, I could even probably draw in a bit of a downtrend that's been broken as well in the last few days. Yeah, not brilliantly accurate, but still you would say that phase of lower highs and lower highs continues to be broken by this move in the last couple of days. So the outlook certainly is improving on dollar Swiss. Bit of dollar strength in line with that those comments by SMB's Jordan there as well. So certainly helping dollar Swissy higher. In terms of sort of other supports, certainly a nice band of support between 94 and 94.20, I think, and then back at 93.30 is the next sort of band of support as well. So I wish you good luck in your trading on dollar Swiss today, and I will speak to you later. Thank you.